Filing your 2025 taxes, the biggest changes you need to know. The 2025 tax filing season opened Monday, January 26, bringing significant changes from the One Big Beautiful Bill. With the end of the Tax Cuts and Jobs Act, higher standard deductions, expanded credits, and new deductions for tips and overtime will create a vastly different tax landscape for households this year. The IRS faces a complex filing season with reduced staff and major systems updates. This limited capacity could cause backlogs for questions and amended returns, according to Forbes Tax Notes contributor David D. Stewart. Here is what you need to know about the changes before you file your taxes. The first change is that the One Big Beautiful Bill Act, or OBBB, extended many temporary provisions of the Tax Cuts and Jobs Act, or TCJA, making core features like the expanded standard deduction and current tax bracket structure permanent. This continuity prevents millions of households from facing higher taxes under pre-TCJA rules, as the TCJA's benefits for individuals were set to expire while corporate cuts were permanent. The OBBB keeps the TCJA's lower rates and larger standard deduction while adding 2025 updates, including inflation-indexed bracket changes, revised deduction thresholds, and refreshed credit amounts. The second change is inflation-adjusted brackets and a higher standard deduction. For 2025, the IRS adjusted federal tax brackets and the standard deduction for inflation. Widening the 7 tax brackets helps prevent so-called bracket creep, keeping more income in lower rates. The increased standard deduction continues the post-TCJA trend, making itemizing less common and generally resulting in slightly lower taxable income for many. Forbes staff writer and author of Our Free Tax Breaks newsletter, Kelly Phillips Erb, notes that this expanded standard deduction is a key factor in the expected larger refunds for many filers in 2026, as withholding tables weren't adjusted to reflect the new rules, leading some workers to overpay taxes during the year. The next change is a bigger child tax credit for 2025. The child tax credit got a boost in 2025, rising to $2,200 per qualifying child and adjusting annually for inflation going forward. The increase comes as the credit's future is politically charged. Forbes contributor Andrew Leahy writes that the credit is, quote, caught between the TCJA, stalled efforts for reform in 2024, and a political landscape with an uncertain appetite for extension. For families, the immediate impact is straightforward. A higher credit means a larger refund or a smaller tax bill, especially for households with more than one child. Because the increase is built into the existing TCJA framework, parents will see a slightly larger version of the credit they already know, offering meaningful relief at a time when everyday costs remain high. Another important change is a major expansion of the SALT deduction. The state and local tax, known as SALT, increased from $10,000 to $40,000 for 2025. This expansion significantly benefits households in high-tax states like New York, New Jersey, and California, reducing taxable income and boosting refunds. The full benefit, however, phases out for incomes above $500,000. Forbes tax contributor Nathan Goldman notes this higher cap is a welcome relief for those itemizing taxpayers in high tax areas whose income and property taxes are often their largest levies. While high earners must monitor the phase-out, the increase restores a deduction many homeowners lost post-2018. The next change is new deductions for tips and overtime workers. New 2025 deductions allow taxpayers to deduct up to $25,000 in tip income and $12,500 in overtime income, or $25,000 for joint filers, with income-based phase-outs. The IRS has issued guidance confirming workers can use various records, like pay stubs, tip logs, or Form 4070 to calculate the deduction, as employers were not yet required to report these amounts separately on Forms W-2 or 1099 for 2025. This provides meaningful tax relief for service industry and hourly workers, though employers will begin separate reporting in future years. Here's what taxpayers should do before filing. Prepare for 2025 taxes to avoid delays and maximize your refund amidst rule changes. Gather income documents, including detailed W 2s, and check if the higher SALT cap or expanded credits alter your strategy. If your income has changed, use the IRS withholding estimator to prevent a balance due surprise. Review your eligibility for the larger child tax credit and consider itemizing if you're a high tax homeowner. Due to fewer IRS staff and new systems, e-filing and direct deposit remain the fastest refund options. A bit of upfront planning helps ensure you take full advantage of the new rules and file with confidence.